We're going to jump right into it today. I've done some research on Tesla and I'm going to discuss what I expect for Tesla's earnings and Tesla's future stock price. I've been in Tesla since late 2019 and I'm one of the perma bulls on Tesla, just like some big YouTubers and Cathie Wood. But I'm going to give you an unbiased opinion on Tesla and just the facts, no hype. I am not a hype guy and I like to keep it realistic. Excuse the thumbnail because I'm going to draw you in like everyone else with what you want to know, but I'm actually going to tell you what you need to know. With that being said, if you appreciate that, all I ask is you smash the like button and check out the description if any of the links interest you. I'm going to start off with what's floating around in the news so I can dial in my thoughts in relation to the news out there. Cathie Wood, as an example, has long been bullish on Tesla, and that's important because Tesla is a momentum stock and it's highly based on public figures like Cathie. So I always pay attention to that, but the focus of this video will not be about her. It will be about earnings. Earnings is crucial for a stock, especially Tesla. Tesla hit $900 a share earlier this year. Currently, the stock has been trading sideways. I would like for Tesla to go back to $900, but looking at the Bollinger Band and moving average, it points to under $800 even in the case of a big move upward. However, by the end of the year, we can still see $1,000 per share if Elon has some news on autonomous driving or if Tesla smashes this quarter of earnings and next quarter. Last year, the company sold 499,500 EVs, capturing 16% of the global market. And that momentum has carried into 2021 as Tesla produced 206,400 vehicles in the second quarter, up 150% over the prior year. A lot of people think that the market cap makes absolutely no sense, but as you can see here, I'm very heavy into Tesla with my net worth, and I'm a big believer Tesla will grow into this valuation shortly and beyond. The main thing I'm looking at with earnings is top line sales and of course earnings per share. Earnings moves a stock short term, but sales and top line figures is where the real valuation comes from. Tesla's key advantage is manufacturing efficiency. Because let's be honest, to keep a valuation that's not too far off of $1 trillion, you need to manufacture a huge volume and sell the vehicles to the mass market. There's competition from companies like Porsche with the hybrid electric Taycan. I see Tesla valuation partly because the market expects Tesla to scale operations and deliveries very fast and capitalize on the technology gap. The technology gap right now is going to be present, but it's not going to be present forever. CEO Elon Musk has often said scaling would be the company's primary long-term advantage, and he now has data to back that claim. Tesla posted an industry-leading operating margin of 6.3% in 2020. Last year, Tesla ramped production of the Model 3 and started producing the Model Y at Gigafactory Shanghai. This helped expand and localize its China business, offering a cost-effective alternative to importing vehicles. At the same time, the company started making the Model Y at its factory in Fremont, California, further boosting capacity. This earnings release is going to give us a lot of insight into just how well Tesla is really scaling. From the past quarter's earnings, Tesla's highly automated, scalable approach to manufacturing is paying off. Tesla has beat 3 of the last 4 quarters of earnings. When I was working at a hedge fund, the research I was doing showed that companies who beat earnings often are likely to continue beating earnings. I actually caught Nvidia at $50 post-split or $200 pre-split because of the momentum back in 2017, and I presented my idea to a hedge fund that I worked at. It resulted in a $50 million investment and is now worth $200 million. I'm not sure if the hedge fund is still holding or not, but if you're wondering, I got paid my small college intern salary and I never saw a penny from the idea that I presented. Tesla is likely to beat earnings, and similar to Nvidia back then, we may see a run of 10 to 15% upwards. But the real money is made longer term as a shareholder, and that's where Tesla's future really comes. If Tesla does indeed build an affordable self-driving EV in the next 3 years, like Elon Musk says, for $25,000, that's a game changer for the stock. It would expand the company's market opportunity dramatically. Rather than simply making cars, Tesla could follow through on its plan to launch an autonomous ride-hailing service, a market that ARK Invest values at $1.2 trillion by 2030. To add, Tesla could also sell its self-driving software to other auto manufacturers. Software companies are extremely lucrative, but a software license would probably run a 99% profit. Aside from a couple employees, there's literally no cost to selling a license. In fact, Musk has already had preliminary discussions about licensing Autopilot. In either case, this would transform Tesla's business, replacing its dependency on cyclical hardware sales with highly recurring revenue in the form of ride fares or software subscription fees. Even if I have to wait a decade from now, the 19.8 price to sales ratio valuation will look small looking back if Elon can execute on even half of what he says. Let me give you guys some perspective. Getting rich quick seems cool, and it is. We all want to get rich overnight, but how many people try it and succeed, like day trading or buying that special crypto coin? I hope it doesn't take a decade for you to reach your goals, but to me, it looks really possible that even by 2025, Tesla could be a $4,000 stock. With that being said, let's jump into my screen and take a look at Tesla options and what they have to say about the stock. All right, guys, so the market literally just closed. It's Friday, and the options that I have in my portfolio are about to expire. And real quick, guys, I just want to say that sharing my portfolio and going through all this stuff and giving you the actual receipts, my trades, it's not something I used to do because my father taught me that you basically don't want to show off. I'm not trying to flex or make people jealous or anything like that. So for the longest time, I've never really actually shared my portfolio, and this is something new that I'm doing because I realized to really build value, build trust, and build a deeper connection with all the viewers and subscribers here on the channel that I want to be as transparent as possible. I really want to show you guys what I'm doing, what my portfolios are like, and just transparency. Really, I realized that it's part of my job here as a finance YouTuber to not only educate, but be transparent with everything I'm doing. Because if I just say I'm doing XYZ, like a lot of YouTubers, hey, I'm doing this, I'm doing that, but you don't show any actual receipts, then I just don't think that's the most authentic version someone could be doing for their audience. So for me, this is a little bit uncomfortable. I don't really love sharing my portfolio all the time, but I'm becoming more comfortable with it because I realize that this is what is going to not only build trust and show you guys that I'm the real deal, whatever I'm preaching and saying in my videos is what I'm actually doing, but it's also going to be a very good educational lesson for you guys so you can really grasp option trading. So essentially what I want to show you guys is the market just closed today. It's pretty much 4:03 right now as I'm recording this East Coast time. I'm in CST, I'm in Medellin, Colombia, and I am going to be leaving Medellin, Colombia for Ukraine sometime in the next month or so. Love it here, but I do want to change a pace. I only have so much time to travel before I have a family. So going to be leaving this country and I will miss it. But that's a little bit about what my plans are. But let's go into this trading portfolio right here. So AMC is a trade that has gone really well. That's closing today. NIO is closing today. A lot of these positions are closing today, but I'm trying to show you guys Tesla. So essentially Tesla is going to have earnings and the stock is going to have a tremendous movement in some direction, most likely in a positive direction because again, like I said, when a stock continues to have good earnings and good momentum, that momentum is likely to continue. So I used to do research at a hedge fund, and basically that's what the research showed, especially when a company beats quarter after quarter. That's just a high momentum company that is going to likely continue to do that. Now, of course, Tesla only beat 3 out of the 4 last quarters. So that's not as clear of a signal as 4 quarters in a row with beating. And then, you know, it's pretty much obvious at that point that they're going to beat a 5th time in a row. But 3 out of 4 times is 75%. So in my book, we have a 75% chance of beating in terms of the next earnings event, which is going to be July 26th. And I believe that is on Monday or Tuesday. So it is on Monday. So we basically just have the weekend to enjoy and then really see what happens with Tesla. And what I'll show you guys in my portfolio is the first thing that you'll see is there's 2 different things. And these 2 options are literally about to expire. So I'm glad that I'm making this video at this time because what I'm doing is I'm selling weekly covered calls, and you don't have to have my account size or portfolio size to benefit because as you guys can see, there's 2 things that I'm doing. Well, one, I'm using my account size to sell covered calls. You can watch my covered call video in the description below. You could do that on any stock, really. You can do it with NIO, and you just need capital of $3,900 or $4,000. I think actually NIO is at $43, so you need $4,300 to start playing that strategy, but you can do it with other stocks that are cheaper, right? Like American Airlines might be $22, so you might just need a couple $1,000s to start doing a covered call strategy. But with that being said, I sold 760 call options because, well, essentially, I don't think Tesla is going to reach that price by this Friday, and it didn't do that. So I ended up making $1,230, it looks like, or just a little bit more because it's probably $1 per contract at this time. So that's gonna leave my account, and I'm gonna do that again next week. And that's what I've been doing with Tesla. Now, what I wanna teach you guys and tell you guys about covered call strategies is that basically you wanna sell covered calls that are out of the money, right? Because you essentially wanna give yourselves room for the stock to appreciate. And that's what I'm doing with the 760 call. I think Tesla will appreciate. I think Tesla will beat earnings, right? And Tesla is currently, let me just pull up the stock price. And I'm actually gonna pull up the chart as well because I wanna show you guys what I look at when I do covered calls. And again, I'm trying to teach you guys as much about options as possible because I truly think it's like a silver lining in the market that a lot of people are not really doing. And if they're doing, they're not doing it correctly like I teach students to do. So I wanna teach you guys as much as possible in terms of that front. So we're gonna take a look here. And I'm gonna go from the 1 year to the 3 month because earnings is in 3 days. So I wanna look at a shorter time period because that's gonna make a lot more sense than looking at a 1 year time frame, right? Hopefully that makes sense. So what I always do, guys, is I use Bollinger Bands, and you probably already know this if you watch some of my option videos, and if you don't, then I have a whole playlist that's free. It's amazing. It will literally teach you so much about option trading. It'll take you from pretty much no knowledge at all to pretty skilled, and you'll be able to make consistent income. So I love to use Bollinger Bands here. Tesla stock is at $643 per share. And the reason why I'm selling 760 calls, or I did last week, I'll show you the call option that actually just sold this week for next week. The reason for that is because when I use Bollinger Bands, I get to see the range that Tesla is likely to trade within. And since Tesla is currently $643 per share, the top of the range says $714. But even if I am gonna be super, super duper safe, I'm all about consistent profits. I'm not about getting rich quick or getting rich overnight. I don't really believe that. I think everyone has to work extremely hard to get to their financial goals. I don't think there's anything easy in life. There's, like you learn in economics, there is no free lunch, right? You don't just walk outside and people just hand you money, right? So there's no such thing as easy money. However, if you do your research and you play it safely, you should be able to have a leg up or an advantage against other people. So I'm always trying to go for consistency and long-term profits rather than overnight success. So what I'm doing with Tesla is rather than going for 714, which would technically be safe, right? And in fact, I went a whole step further, guys. I've really dialed in this risk here. I really went a step above and beyond rather than just saying, hey, here's a technical chart. I've actually went above and beyond here, and I've actually put 3.5 standard deviations. I realized that Yahoo Finance actually allows you to do that. So again, a standard deviation, just simply put, guys, it's a statistical measure, how likely a stock is to move in a certain direction, right? So usually 2 standard deviations on a bell curve is gonna be like, I think it's like 95%, right? Don't quote me on that exact number, right? I took statistics back in college, but essentially more or less it's about 95, maybe 96%. And if you do 3 standard deviations, it's like 98 or 99%. I put 3.5 standard deviations, guys. What that means is I'm trying to be even safer than safe. I mean, this is as safe as it gets in terms of stock market investing, right? 3.5 standard deviations is like a 1% chance that Tesla is actually going to rise beyond $714 in like the next, whatever, few days. Okay, but I went a step beyond, okay? So rather than using 2 standard deviations or 3 standard deviations, not only did I use 3.5, I also took into account the longer term Bollinger Band. And again, guys, technical charting is an art. It's not a science. If some YouTuber, somebody tells you that they know the exact price prediction of the stock within 1 week, you do whatever you want with your time, but I recommend you go with someone that has more of an unbiased opinion that's gonna give you both the good and the bad, which is what I'm really working towards on this channel. I'm trying to give you guys the good and the bad of everything, really, so I can give an objective view. And something that I did with Tesla, right? The reason why I sold 760, I know I'm giving you guys a long explanation. I just want to be transparent because I love that, right? I feel like it gives so much more value to my audience, and that's really all I'm aiming for. Long story short, I sold 760s because the longer term Bollinger Band average is around $750. So if you sell the $760 strike, then you're assuring yourself that you're super, super safe. And now that I just noticed, that's also $100 away from the current stock price. So I felt super comfortable, and guess what? It worked out. It worked out really, really well. There you go, guys. It's out of my account. I told you it's going to be out of my account in the next few minutes. Oh my gosh, the option experience, guys. 8 years of this stuff. I had a feeling that it was going to leave my account. So what ended up happening was, because it was 4 o'clock, option expired worthless. Collected my weekly income just like I do pretty much all the time for myself and all the clients in my group, which you can, by the way, schedule a free call with my team below. It just left my account. So now what you guys will notice, and I wanted to tell you about the put credit spread, but I recently made a put credit spread video on NVIDIA, and I'm going to make another put credit spread video again. But essentially, the put credit spread that just left my account was me betting that Tesla is not going to go down towards $580 per share. So put credit spreads really give you the advantage because you don't need a large account to do spread trading. It was just a $500 spread, and I opened up the 580 leg and then I sold the 575 leg. But actually, I have a new position in my account right here. It's actually, there it is right here. I literally just opened this literally a couple minutes ago before I started making this video. And the 570, 565 put spread, here, let me just click into this real quick before I go over more covered calls now that I'm on this topic. I literally just sold this for $120. I opened up 3 contracts, which is basically $1,500 worth of capital, but because I collected $120, it's really $1,380 worth of capital. So when you take $120 worth of money that I collected, divided by the money that is sitting in collateral, it's between 8 and 9%. So in one single week, collecting 8%, guys, I mean, that's a stupid amount of money because, I mean, you can't really do that consistently. 8% a week will make you ridiculously rich because think about it. If someone had like $1 million in their account, they can make 8%. That's going to be 80 G's a week. And I'm just going to be honest with you guys. You can aim for big returns, but the reason why it's 8% is because of Tesla earnings. So taking advantage of Tesla earnings volatility, since the implied volatility is higher, there is a lot of money to be made. So essentially this is an 8% trade in just a week, and this doesn't require a whole lot of capital. So this is a credit put spread. Again, guys, I'm gonna make a video on this, but I just made a video recently on NVIDIA. Will be in the description below. So let's go back to my portfolio and let's just quickly cover the option that I just opened literally also today. It says I'm down 350, which is pretty common, especially when you open up an option in the very first day. You're usually going to be at a loss because, you know, factoring in the bid-ask spread. Plus, I've never said I'm a day trader, so I just opened up the option today. Sure, I'm down just a little bit, but I don't expect to be down by Friday. I expect to be up just like I'm up here and all these positions that unfortunately just left my account, so I can't show you. But you've probably seen it just a few minutes ago in this video, but I no longer see it. So I sold 730 calls, guys, for next week. And the reason for that is because Tesla was having a bit of a pullback. And again, if you take a look here, you know, the Bollinger Band average is, the Bollinger Band top, I should say, is 714. So selling the 730, I feel very comfortable and very safe with that. I was thinking about selling the 714 or 715 level. But again, guys, I'm always going a degree safer than I need to because I personally don't think anyone should be rushing for wealth, because when you get desperate for money, you end up making mistakes. So you really don't want to be rushing to make your fortune. Just take your time, get rich. I don't want to say get rich slow because that's not fun, right? But also don't get rich quick. Be in an optimal place where you're gaining wealth in a safe manner, that you're taking risk, but you're not taking excessive risk. So for me, what that looks like is the 730 call option. And yeah, that's essentially my current Tesla positions. If I go down a bit more, I've made a good amount of money selling puts. Selling put video, you guys probably already seen it, but if you haven't, description link. 11,000 on selling the put. More credit put spreads. Credit put spreads are fantastic. I literally post them all the time in my group. And again, more puts right here for January. And again, $8,900 worth of profit here. And I had Palantir. I was running the wheel strategy, which I made a video on. Sorry for telling you about these videos, but I just want to educate you guys. They're free videos on YouTube. So trying to educate you guys as much as possible because I recently went all out into just teaching options. I really just want to focus on that because that's my area of expertise. Worked for Goldman Sachs. That's what I did for research. I've worked for an option trading hedge fund as well. So that's what I'm trying to teach. I'm running the wheel strategy on Palantir, and that's why it says 0 shares. I just had 500 shares. And as a team, we just made profits here on Palantir. But now because I sold the covered call, I got executed, which again, if you're selling covered calls, it's a phenomenal way of making income, but sometimes you'll get executed and you will lose shares of the stock. But again, that's not a problem if you sell a covered call that is a higher strike than what your average price is, which is what we did with Palantir. So Palantir is gonna leave my account, but I did sell, I didn't sell a put option. I'm going to be selling a put option on Monday. So if I make a trading video here on YouTube on Monday, then I will have that. Otherwise, it'll probably be in the group. So with that being said, that is my Tesla portfolio. That's my portfolio in general, just being transparent with you guys. So let's continue on with the video. If you do want to learn how to produce consistent weekly income and create cash flow safely without taking a lot of risk or waiting impatiently for a single stock to grow, then definitely check out the link in the description to the brand new Option Income Academy, where I go over my option calls, picks, and plays in real time, breaking down my full thought process. You will also get very hands-on access to me and my team of 6 and 7 figure coaches. Click the application link below to see if you qualify for some free training. And as always, guys, be aggressive in learning, but be safe investing.
No one ever sees me.